right, it looks like we're live. Hey everybody, this is a crypto talk. So as you can see, it's crypto money talk. This is going to be a little bit different. In between while I'm recording other videos for the channel, it's taking a little bit longer than I would have liked to take, especially on that Tory Bowie one, because I'm changing the format. If I did it the exact same way as I did my previous videos, then that would have been launched out about 2 days ago. But I'm doing it a little bit different. You'll see on the graphics and everything for the video that we'll have that. But like I said, today's topic, you see the title. Let's bring this up here. Okay. Less risk, greater reward. Turning crypto into your retirement plan, Bitcoin trading. That thing right there. You see the title. So basically the underlying thing is how to make something from nothing in crypto. And there is a way to do that. I like to start off by saying, look, I got to cover my behind. I got to cover my rear end for the SEC and all of these other 3-letter government agencies where I got to say, you know what I got to say. But seriously, though, this is not financial advice. This is showing my mindset. You get to see how my mindset is when I'm approaching these things. And don't take this as financial, legal, or tax advice or anything like that. This is educational purposes. So after that is out of the way, and I got the disclaimer in the video description. So if you try to say, well, I didn't know, look, we got disclaimers all over the place here. Okay. Without further ado, don't forget to kiss the diamond, as we always do on this channel. Means like, comment, subscribe, and most importantly, share. Thank you guys that are coming out here for this video. And if you'd like to support this channel, once again, look in the description for PayPal, Patreon, or anything like that, especially if you want to learn the crypto trading here. You would do the second tier of the Patreon right there. Let's take this off of the screen. First of all, if you guys have any questions, let me know. I want to tell you the risk here. Actually, let's put this in the background, my traditional background image, or actually this one. A lot of that on one of our earliest subscribers. He might have been subscriber number 2 or 3 actually on this list here. But I remember he was here when we had less than 50 subscribers on the channel. So he said, hey, high risk? Well, not necessarily. Look at this. This person has taken high risk, and I blocked out the Telegram channel here, but I'm pretty sure you can search it by typing in some of these things. Look at this part. Pay attention at the bottom where he said, I held, and I get these messages all the time. He was responding to me, actually. He said, I held $120,000 of Bonfire down to, and I think that's the name of the crypto. He said down to $7,000 after the China crash. Not sure. Oh, okay. It's probably some news about China. I didn't pay attention to it. But after the China crash that happened a few weeks ago, then the team abandoned the project a month ago, despite it being on the rise. It was my first ish coin and the last time I will ever make that mistake. Now, this dude, he decided to put all $120,000 of his money into something like that, right? And guys, let me know if you can hear me. I think you guys can hear me, but let me know if you can hear me. He decided to take his, actually, I'll put this in a comment, because some of y'all guys, y'all be in this thing, and you will never tell me if you can hear me. So I'll actually chat it here. Okay. But anyway, this guy decided to put his money inside of an unknown project, thinking he's going to take $120,000 and then come out the other side pretty good. All right. No, that's not how these things work. You definitely want to make calculated judgments. That's called gambling. I don't do gambling around here. Gambling means, hey, the difference between gambling and trading really is that you're going against probability. You want to put the probability in your hands. Thank you for letting me know. So you want to put the probability in your hands. Gambling, you lose 100% of your hand when you're gambling. In trading, you get to control your loss. If you got a stop loss at a certain point, he could have just lost $10,000 out of that. He could have lost 50%. No, this dude lost over 90% of his money. What is it? 95, 98% of his money, down to $7,000 because he was gambling this. And then he's continuing to gamble on other things based on the conversation that he was having. And I'm just like, I don't know about that. So if you guys think you need to take ultimate risk to get these rewards, Nah, here's a screenshot from my client here. Now, you guys saw me post this yesterday. Now, I'm not a financial advisor, so I can't tell my client directly not to do these things, but I wouldn't have done this same move. Now, this amount of money that he had here, the $40,000 that you see it through the 2 transactions. If I blow this up a little bit here, you see the 2 transactions. Oops, wrong. Hold on. Here's the 2 transactions here. You can see 28,000 something and 11,000. So about $40,000. Now, at the time of this screenshot, which was yesterday morning, it was almost $70,000. Now, he took knowing what he had told me about how much he has. I'm not a financial advisor. I can't tell him what specifically to do. I don't want to take on that legal burden. But he can learn my mindset. And with my amount, I wouldn't have put that much. Right? I wouldn't have put that much in this because there's always a chance that we could be wrong on some of our trades and everything. But he made his own decision, right? He learned from the education that I have there, my mindset and everything. He decided to put this. Now, it turns out that this is 70,000. This could be just the beginning. And in my opinion, I think it is the beginning of that. This is somewhere where with the amount of money that he has there is 350,000 to 1.2 million that he can turn around from $40,000. That's where I actually see these. And if it's more modest, hey. Now, when he gets to about 80,000 under my strategy, anywhere between 2x to 4 times your return on investment, I'm taking my original investment out. That's what I do. So if it's 40,000, by the time he gets to 80, 120, or 1,500, right? Actually, no, 1,600. Then he's got to take out the $40,000. Now, whatever he decides to do, that's his own thing. He's an adult, right? Now, here's another example. I'm turning around good things. Now, this person winded up taking about 5,200, if you can see here on this one asset, on September 4th. You saw that the date is right here. Now, this was also yesterday. This person sent me this screenshot yesterday. 5,200. A month later, in a week, $10,624. Now, on the 7th of September, the market, I guess that was the China crash or whatever they said, because that was the news or something like that. The market had crashed. He would have been down about $1,500 on this amount. Now, knowing that this was a smaller amount, this was a safer trade overall. That would have been something along the lines of what I would have done in proportion to knowing that person's amount. Now, let me show you guys how to take nothing. Because some of y'all are looking at this like, I don't got $40,000. I don't got $5,000, right? Well, here you go. Now, this is not going to talk about that compound interest stuff here. Oh, I don't have the screen here. Here you guys go. Now, this is not talking about any of that. This is talking about basic stuff. I'm going to tell you a trade that I did. Right? I'm going to show it to you on screen about what I did. Obviously, in the moment is the hardest thing. The hardest thing about trading, in my opinion, is not the bad entry. Because let's say you were the poor sap that bought here in May when things were, because you just didn't know. This is your first time getting into crypto or something. And I'm looking, hey guys, look, blah, blah, blah. Bitcoin is never going over 6 months continuous here. And that's what happened in March. Indecisive candle. You guys don't know what that is, but think of that as a cross on April. And then May said, vomit to the downside. But let's just say you didn't know that. You didn't see it coming. Well, see, exiting a position is the hardest thing for people to do, because you could have exited and take a slight loss. You said, I'm down 30%. Let's see here. Yeah, you could have been down 20% on your money and you said, I'm out and I'm going to wait and see what happens. Then if you waited and waited and waited, it came down here and it's starting to come back up and everything. Then you could have bought back at a lower amount. That's the hardest part, because you could turn a bad position. You just lost a little bit of money into a good one where you're buying anywhere down here. Because if you sold right here, anywhere under here, especially if it's more than a 20% loss, you actually can buy more with less money now, because if you're not adding anything extra, you can buy a higher amount of this asset than you did before. You guys get what I'm saying? If you don't, stop me and ask me a question. I want you guys that are live here to ask me a question. Now, the other part is, what if you bought right here, right? You bought here in April. It went all the way up here. You don't know when to sell. You're like, yeah, it's going to go up forever. I'm diamond hands. That's the term that they use. Buy and hold, buy the dip, buy the dip. You started buying here. It dumped a little bit here after it pumped. And then you average and you average and you average right here. Then it went up here. You didn't know when to sell. And it went down. You panic sold. Or somehow you borrowed against your money. Because the people think that's smart. They say, you know what? I'm going to borrow against my US dollars. I'm like, do you know the difference between you and somebody very rich? Person that's very rich can afford to probably not pay back that for 15 years. But if this goes, your guy should never have bought when the market turned. May. Oh yeah. This isn't my guy. Okay, just letting you know. That other guy. So when you say your guy, this ain't my client. The one that responded to me, this was just some average Joe. All right. But if you just mean your guys in the general thing, yeah. But I just like to be very clear that wasn't my client. Now, one of my clients had joined right before the beginning of September. And the standard thing I tell people is like, when you join with me for 2 weeks, don't trade, don't do nothing. Just watch the videos, ask questions. Watch videos, ask questions. What did this dude do? He did the complete opposite. He said we got a standard thing when you're learning to trade, don't risk more than $100. The guy's risking about, I don't want to give all of the information, but just know that he went from 6 figures, that he's basically, the other guy that had $120,000 and whatnot, that's 6 figures. So yeah, he was well above that, down to freaking 4. That's in the thousands. That's below 10,000 because he didn't listen. And then even when he was still at 6 figures or 5 figures at this point, and I'm like, yo, you didn't listen to the thing. I know I'm not giving you financial advice. The thing I am going to say is that it looks like you're very big emotion and you should stop trading and you should watch our videos. Watch the videos. It's a reason why I say wait 2 weeks. The trading will always be here. It will always be here. And he didn't even have to trade. That's the thing. He didn't have to use leverage or anything. This was a brand new guy. Usually I don't even allow people that I think are going to be high emotions in as a client. I don't like to work with those people because everybody can't work with everybody. And I'm not here to work with high emotion people that just go in and out and blow themselves. Unfortunately, my filtering system didn't filter him out and he came in, he didn't listen. So that can't even, that's not 100% on me. I take it on me a little bit because I didn't filter him out, but I can't take responsibility for him because the dude came in 2-3 days later. He's already not listening, blew his money. And I'm just like, oh my goodness. But yeah, that's one out of nearly 100 people, right? Well, we got most of the people that know how to make profits, know how to listen, because I do filter the people out. I make sure it's hard. I'm asking you hard questions and making sure that I'm getting you. I'm even doing stuff. It might even irritate you. If I find that you get easily triggered, yeah, I ain't working with you. If I find that you can't focus on these things, I'm not working with you. And apparently, it passed the filter, right? It passed the filter. Now, there's another person. I'm not going to put his business out. He's became a subscriber here. I'm not talking about him. He went through a different thing. There were about 2 people that joined at the same time, and they were in a similar situation. But the guy that subscribed here, I hope that he is able to do some things. He's got some stuff going on in him with himself. Like I said, I don't put all of their information out. I did ask the other person if I could share his not listening to other people, and so he did. So as far as the other one, if you're listening right now, I'm not talking about you. So those details aren't, even if you think it sounds like you, because that guy, yeah. But anyway, back to here. Let's show you a trade that I did. Matter of fact, somebody tried to sell me this thing called staking. If you guys are familiar with crypto, for the ones that are, because I know there are some subscribers to the channel that are, they said they're familiar with staking. Okay, let me just simplify it here. Staking is essentially a savings account. Savings account are supposed to work. Now they got the fractional reserve lending where you give them $100 and they can multiply it. Why is my mouse not working? Oh my goodness. Okay, hold on just a second. My mouse is not working. There we go. So you give them $100 and then essentially they have 1,000 now. They multiply an extra 900 out of that. That's fractional reserve. But the way a savings account is, you give them $100, they're lending it out to somebody else, a portion of that, at an interest rate. You get paid part of that interest rate to your account. That's where they make their money. You're making some of your money. Staking is essentially that. Except with crypto, there are different versions of staking. Some can be paid off of, okay, these are transaction fees, so you're getting them. And other ones, you're getting paid a fee based on them lending it out. Or it could be a combination of both or some other version. But that's essentially the overly simplified version. Let's show you a trade that I did. Some guy told me, hey, you could stake your US dollars. It was some crypto version of US dollars here. And then he said if he had to do it all again, that's what he would do. And he was telling me that's what I should do. Then I said, I can outwork you. I can almost guarantee I outworked your math on your $4,000 because that's what he said he had. He said 12.8%. So we rounded it up even more, right? No, it was 12%. That was $480. I'll show you the math right here. $480. Let's do this. $4,000 times 12%. Ken M, thank you for the £5. I appreciate it. I appreciate it, man. Thank you for that support. Anybody else that, if you guys are supporting via Cash App or PayPal, I do thank you in advance. I don't have those devices in front of me. I usually have the two different phones that notify that. So here it is, $480 right here. This is the big number calculator because we're about to get big in a second. Now, this is over 1 year. Now, technically, if I gave him the benefit of the doubt, because I'm about to show you an example of about 18 months. Let's give him 18 months. So that gives him another $240 on top of that, which is $720. No, $720. That's $720 that he made. So he will have $4,720. Okay? This is on his $4,000. He tried to tell me this technique, and he told me to borrow against my assets. You know what happened? On September 7th, a whole bunch of people got liquidated because they borrowed against their stuff. This ain't like borrowing at a bank. You're borrowing to buy Bitcoin and all these things. They go down. You got to pay a certain amount and you can get liquidated. So, you should be looking to buy Ken M. You're in the UK. That's what standard procedure said. Okay. By the way, that's what standard procedure. If somebody's not seeing my chat, my live chat, before you think I just told somebody to buy. Now here, let me show you an example. Remember, he made $720. I bought this asset called Harmony. The ticker symbol is 1. Hopefully you guys can see the screen very well like I can. Maybe I need to zoom in a little bit more for you guys, but here we go. I bought this on March 22nd, 2020. Okay, March 22nd, 2020. I'm going to show you where this was. So this was after that COVID crash. Remember, March 22nd, right here. It was a red candle. Now, this is one of the few assets that I did buy. And I'm going to use the most extremely small numbers, and I'm going to kick his behind. Okay? No, Ghostface Nasser, I'm not even talking about futures. People think they do this big brain thing right here, thinking they're doing it. I'll show you right here because I got it right here before I continue that. Good thing you asked that question. Okay, this is something called Aave.com. For the people that have subscribed for at least the last 2 months, you would have seen me brought this thing up 2 or 3 times. Now, think of this like a Chase Bank or something like that. They're looking like a bank, right? So people would say, come here and use USD coin because they did that deal with Visa. So it's a US dollar equivalent. People are borrowing it, right? And DAI, that's a stable coin. That's what they call. Now, what's happening here is people say, all right, I'm going to deposit my $4,000. They're going to pay me this much interest. Now, this way, they're only paying you 5% and charging you 13%. But on this other one, it was some other crypto. Basically, they're trying to incentivize you to go to their crypto. So that's why they're giving you more percentage than the borrow percentage. That's why. But these are more established. So they don't need to do that to incentivize you. They already got billions and billions of dollars here. As you can see, it's 4.68 billion that's deposited here, and people have borrowed 4.23 billion, right? So This is the difference here. So people have basically borrowed almost 100%. They borrowed up to about 90% here. Now, what has happened here is they say, well, I'm not going to borrow against my Bitcoin because Bitcoin fluctuates. I'll get liquidated on that, even though it's not futures, right? They think they can't get liquidated on these things. What happens is the person will borrow against their US dollars, thinking that they're going to do more. They think Bitcoin and all the other ones go up. They don't plan for it to go the opposite. They just think one direction. They don't think this is going to go down 3 years. So even if you don't get liquidated on this, let's say you use $4,000. It's charged you 13%. Now you've paid, remember, $480 or 12%. Let's just use the 12%. $480 a year. It stays down for 3 years. You just borrowed to get the Bitcoin. Now you're paying about over a quarter of the money you got there. Now imagine you used it with $40,000. Imagine you used it with $400,000. What if $4,000 is a lot to you? There are people in India. $4,000 is a savings for these people, right? You could be in some places in Africa. That's a lot of money. That's 2 years of rent in Nigeria. I would know this. So, right. So the thing is that these people aren't thinking that, okay, this could be a bear market at any moment. This could be down for 3 years. I'm paying the interest rate on it, and I can't even afford the interest rate because I put so much money in. They're not thinking that, right? So Kenium said, I kept missing your live streams. I owe you. Oh, thank you, Kenium. I appreciate it. I appreciate the support. Look, that's the example here. People don't think that, but remember, the market dropped like 60, 70, 80% depending on what it was. Let me go back to this example here. Let's go back here. March 22nd, right here. I bought on this candle right here. Now, technically, I could have sworn it was this one, but remember, these are UTC time. So in London, it would have been the 23rd, but on my calendar, it would have been the 22nd. But we're going to go with this because it's exactly the same. He said, I need my glasses. Right? So here it is. Look. Now, March 22nd, here is 0.002. This is all in US dollars. It's 2 zeros. It's a 0 point and 2 zeros in the 2. Now, when I sold, you saw me sell. You could see my sell because it was that big of an amount. But let's just pretend I wasn't that big of an amount, right? Let's keep going. Here it is. I sold 1 year and 2 days later, which is March 24th of 2021. Here it is right here. Now, you saw my sell. I probably am one of the whales that caused this thing to drop. Who knows? But because this was like the all-time high and near the all-time high. They tried again a couple days later. I sold and I didn't look back. Now, this is what I did. I sold on this day. I had about 100x profit. Let's just do the simple math. 100x profit, right? What did I do? About 2 or 3 days later, I went over. I took 100% of that out. Now, this is because I forgot about it. My normal strategy is it goes up 2x to 4x, right? Normally 3x to 4x, actually. And then I take my initial investment out. But I forgot about this, and by the time I saw it was like 62x, and I was like, I'll wait till it gets to 100x and I'll pull it out. Because I had bought a couple of different cryptos and I forgot. Now, what did I do? Now, this was March 24th on this one. This one dumped. Now, I bought over here on the 28th. It went up 80% somewhere in this range or over here, one of these two, right? Went up 80%, I sold. Turns out a couple of days later, or the next day or something like that, it started to dump. I didn't pay attention to it at the time. Now, that means 80% on 100x, that's 180 times my return on investment. Then what did I do? All right, and like I said, I got all the data on this. If you want to ask for proof and all of that stuff, you can ask me aside. You can give me an email. I'll send it to you. Now, here, what did I do? Well, on July, this is when I started focusing, because remember, the Olympics were around this time. So with my clients, I said, hey, I'm not going to be in this Discord group for the next month, but these are the ones I am looking at. I put my money where my mouth is, and matter of fact, here is the chart right here. This is what I had it on. What happened was right here. I think it's July 21st. Yeah, July 21st, this thing bounced. Between here and the 27th, which is this last green candle, I was buying. I used 100% of what that was. Now, going back here, now my average was about 0.0 0.06, like 6 cents, right? 6 cents, between 6 and 7. Now, today it's a little bit lower, but we're going to use the high right here. I essentially got about 4.5. We're going to round that down to 4 times return on investment, right? On top of that. So I had 180 times 4. This is just this one trade. Now, let's just say I started with $1,000 and I just put $10 in that thing. Okay? That means my other $990 of, let's call it a gamble, even though I don't think it's a gamble, right? Let's just say I randomly just was like, all right, everything done. I'm putting $10 and everything else just went down, including Bitcoin. Just pretend. All the other assets that were on Binance and whatever site that went down. Let's just take this. Remember, this guy made $720. He's got 4,720. Let's take $10 times the 100 times return on investment, 100x. Obviously, there are fees and taxes, but simplify it here. That made me $1,000. So remember, that means I broke even. Let's say I lost that other $999 or $990. We just gonna pretend. Technically, I will have $1,990, but let's pretend. All right. Now I made another 80% on that, which really means I made another $800. Let's multiply that again. All right. Remember now, that's 1,800. Now we're going to take the 1,800. And remember, I'm up 4 times on that because we're rounding down. It's really 4.5, but 4 times on that. I got $7,200. I've outworked, outclassed, outwhipped that other person that said they thought they were doing big brain thinking, and they put themselves at extreme risk because they could have borrowed against their asset. Most likely, you're not going to borrow once. This is how our minds work as a human, right? Like a drug cheat, right? They didn't just say, I'm going to take HGH one time because I didn't get caught. I'm just taking it one time during the off season here. They're going to keep using it until they get caught. What's going to happen? These people are going to overborrow, borrow more, borrow more, borrow more, and then they're going to get liquidated. They could have got themselves up to $20, $30, $40, $50,000. I've seen this time and time. I got the messages for those too. So here it is. I just applied one principle here, and I actually just technically forgot my original, but here it is. Remember, I follow my rules. The last one I forgot down here because I didn't see it until about 67 times. But here's my target. Once I get up here, I'm taking my profits, and it's almost close. It didn't get to it. I'm just going to let it ride. I'm going to take my original investment out right there. 28.5 cents, essentially. Once it gets to that blue line, I'm out of my original. That means I'll be up 5 times return on investment. No, actually, let's round it up to 7 because it was above 6 but below 7. But if I rounded it up to 7, which is what I did for my simple math, so 28 cents there, that would be 4 times return. So I'm getting the 4 times. That means let's just pretend I had 70. Yeah, it will be 7,200 under this example, right? That means I take 1,800 out. Here's 7,200. I got 1,800 I take out. Let's subtract it. And now I got 5,400 left in there. I could never lose profit. And then I repeat the same steps over and over with other assets and keep pulling them out and pulling them out. And this is how you build up. And this is how you build up your money. You don't take those large risks. You don't take the unnecessary risk and everything like that. You're not doing what the other guy that I showed you in this screenshot. Let's bring it back up on the screen where he took $120,000 and he took a big fat wet L, right? He took a big fat wet L. I don't know why it's not letting me stretch this out here. Oh, I know why. The guy took a big fat wet L because he took a lot of risk. You see, what I'm doing here is I showed you guys a low risk scenario of what I did. So many people are chasing these things like Shiba Inu and whatever, the pumps and everything. I'm going to show you right now 2 other assets that just did something very very similar. And since you guys, a lot of you guys aren't living in the US, you guys could have used Binance. You didn't have to use a VPN. You didn't have to do that. All of these things here were on Binance.com, right? Now, they changed their stuff. The CEO dropped out and everything like that. And then they're under investigation by the SEC because of some things. But let's just say you were using them. So now they're clamping down on US based people and everything like that. So let's say you weren't US based. Let's say that you're in Jamaica. You're somewhere else. You ain't got that much money. Well, there were several assets that were on here. Here's another one. And like I said, if you're wrong on some of them, if you somehow were able to get $1,000 and you just put 10, look, I was wrong on this. I thought maybe there was a good chance. Now, I always think of the downside. And by the way, we were already in over here, but this is just a continuation here. I'm like, okay, maybe it's going to go here. That was my target. And here's one that I got wrong on. So I'm not always right. I'm just right a lot more than I'm wrong, right? So if the same strategy you applied, here it is, March of 2020, right after that crash, or you could have waited at any time. You could have bought this in the fall of 2020, matter of fact, even January and February of this year. You know what you would have done? Let's just get you at the very latest. You're new to crypto. You got in February, the beginning of February. Let's show you what you would have gotten just somewhere in here. Now, this means, let's subtract that 0, 2,000. That means you would have got 20 times return on the investment in 2 months. That means somewhere in there, if you apply my strategy, once you're up 3 to 4 times, once you're up 3 to 4 times, you take your initial money out, you go to sleep like, you go to sleep like a baby. Now, a lot of other people, they say, buy the dip, keep buying in, keep buying in. Did you know that if you swing trade, in my opinion, you need 8 to 25 trades a year and you could make more money than that. Like, you don't even have to add extra crypto in there. If you had that $1,000 that we were talking about, $10,000, you darn near untouchable with some of these. Now, you could have been caught in the bear market, which would have happened in between 2018, right? Well, that's why you didn't put that large amount. You just said, hey, I don't know what the heck I'm doing. Oh, wait a minute. You guys don't see the screen. Sorry, guys. Dang. I forgot. I had that as plastered on the screen. Can somebody let me know the next time? Ashanti said, oh, I thought I'd jump in here real quick. Hey, what's up? Shout out to you. Sandy said, I want to learn this. If you want to learn it, I would say join the second tier of the Patreon. It's in the description, actually. The second tier, not the first tier. First tier is just supporting the channel. Once we get enough people that support the channel, we're going to do those animated videos that I was talking about, or maybe we experiment with that. It may be a flop, but we're going to try to do something. The second tier, I start, anybody that's in that, then you have the, I think it's the crypto, it's like the crypto, it's something that you get a name, it's a title in the Discord. But you have a certain color and then you're in a group. So then people with that title are the only ones that can see that content. But let's just take the same thing. You go here in March, or like I said, you could have got here as late as February. Let's say that you just joined this year. That's 20 times return on investment. Or if you got in at March, well, you're looking at 200 times return on investment. Forget the 100, right? Forget the 100 times return on investment. You're 200. And that's not even talking about the high. Right? That's not talking about the highest price. That's just coming out somewhere in here. Guys, you guys think about this for a second. Think about it for a second. People keep telling you, and when they advertise to you and they say, get into crypto, I'm making these huge gains. Most of those people, they ain't got nothing. They don't have a pot to piss in that are telling you these things. They need you to come in. They're chasing these large amounts. Like, they'll chase the Shiba Inu crap coins. They'll chase the scam coins. You don't even need to gamble with those. The assets that I'm telling you have been around. They were here on 2019, right? They were here at least a couple of years before you would have got in. Here's another one. Now, this one, a buddy of mine was like, yo, 400,000 something dollars from like 500. And I was like, what? Well, this is what happened. During that GameStop pump thing that happened, a huge gap. You see this huge gap? This was random. I couldn't have placed this. Although I will still say that this same asset was here since 2019. There's another asset that I had showed you that I blanked out everything here though. That looks very similar to this small thing here, getting ready to do this. So that's all it is. It's taking small risks for a larger return. Ashanti, he said, how much did you start with in Bitcoin? I started with $0 technically. I started with nothing. What I winded up doing was I had wrote some articles on steemit.com. There was a site where it was like, think about a social media and then you get paid based on people liking your posts. So imagine if your likes actually could get people money here. Then I'll be like, yo, like my videos all the time. Like my content, right? So that's how that was. That's what that was. I don't use it anymore, but I think I made a few $1,000s with that. And then I used that then I signed up for Binance.com. That was when anybody could use it. USA, this was back in 2017. USA, anybody. It was a new site and everything. I think Binance was created in September. I got in August of 2017. That's when I had first got anything in crypto. And I had bought and sold XRP and Tron. And I had the digital rupee. That thing went up like 500 times. And I got about 20 times return on investment on that one. Because that thing just snapped. And I said, all right, I'm pulling it out. I didn't know all of the things. I just knew this thing pumped up a lot. I'm pulling my money out. I'm going somewhere else, right? But with XRP and TRX, I kept buying and selling back and forth. And I realized, unlike on Charles Schwab or TD Ameritrade, where they limit you about how many times you could trade a day below a certain amount, right, in your account. Well, this one, you could just go in and out a lot. So yeah, I technically started with $0. I added some money in later from things I did, like resume writing and other stuff, but I started with $0 in there. And the amount I added in wouldn't have really made much of a difference since that stuff got hacked away anyway. And I lost all of that when I put all of my money, or my trading money, to be clear, on Cryptopia. And then they got hacked, quote unquote. And then all that money was gone. So even if that was there, that didn't really matter. So here's Cocos. This thing right here, right? If it gets up to $2, that's a big if. If it gets up to $2, that's 2,000 times return on investment. No, that's 1,000. 1, 2, 3. Yeah, 3. So it would have been a 500 times return on investment for this going up to just $1. Okay, just $1. Just imagine. Here we go. We got the 10 times 500, right? Now you will have some version of that. That's $5,000. You know what you could do with $5,000? The same strategy you just did the first time. Maybe you said instead of 10, I'm doing 20 or 25 or 30. But still, it's like the same strategy. If you only had 1,000 and then you said, I'm going to do this and sprinkle it here. Just remember, you could do that same thing. Now you have a larger pot to use. And these aren't huge risks. That's Cocos. The other one was BTT. These things are here. These things are here. And they weren't these super risky, outlandish trades. It was something you just sat, you forgot about it for some months or a year or so. Then you came back in, it got up to your point. You said it gets up 3 to 4 times, whatever you got it. You started with 10, it's up to 40 now. You take out your regular 10, now you look for something else. You didn't have to say, I got 10, now I'm going to add another 10 this weekend and another. Now you can do that, which increases your risk all the time. Right? You could do that and say, I'm going to add 10 and 10 and 10 and 10 because the price hasn't moved when I get paid over these next few years. And then by the time a bull market does return, sure, that could have worked for you, right? If the bull market, you're like, hey, in 2018, 2019, I'm just buying randomly. So by the time this comes, instead of me here, now I got 500,000. Maybe that's how it happens for you, right? My strategy is not to do that. My strategy is, I bought this, and if some time goes on and I see that I bought here and then it looks like it's going to come back slowly, yeah, I'll add in some more, right? But I'm not doing that random thing that they say, well, just do with no thought and just buy the dip, buy this thing. That's what the rich people do. I'm like, look, I'm copying what the rich people do. And let me show you right here. Where is that tab at? Okay, what the rich people did, they did this thing called the swing trade. So between May 1st and May 18th, they sold. This was before Elon Musk's tweet too. When people were saying Elon Musk dumped the market and whatnot. Yeah, May 1st was before Elon Musk tweeted. And matter of fact, they were selling in April. This is only counting from May 1st. Okay? They were selling in April to even lead up to this. Because you don't just start selling like at the first of the month. They didn't just start selling. They were selling before that. And you can see it on the chart. Now, they sold 111,000 Bitcoin. Tell me why in 2 days, May 19th and May 20th. And when they say investor whales, that means people that have 1,000 Bitcoin or more, not trader whales. Like he defined investor whales are people that keep 70% of their wallet balance above 1,000 or something like that. And then trader whales is like they have less than that and they trade more often. So they added a profit of 53,000 Bitcoin. So they started with 111 that they sold. Then they bought back 111,000 and added 53,000, while the rest of the people during this time that had the big brain, tinfoil hat, I'm going to borrow against my money and then I'm going to get these other assets. Guess what? I'll show you on the chart here. They said this was the largest liquidation that ever happened in the history of Bitcoin and crypto. Right? The largest liquidation. That means forced selling that ever happened. I'm going to show you. It was pandemonium and I was up. It was like 4 o'clock in the morning. I was like, all right, guys, I'm closing my short that I did at 60,000 at 30 and a half, right? I closed it right in there. I remember this. I remember this on the 4-hour chart. I was up. It was like 4 o'clock in the morning. I think it was 4 o'clock. Could have been 7 or 8 in the evening. That I remember it was a 4-hour candle, but I remember this clear as day. It was like, okay, it's getting close. And then I thought it was the bottom. What was it? It turns out it was the bottom, roughly. Now, here it is right here. This went here, and I learned my lesson from March 12th or March 11th of 2020. Because I remember that last time I shorted from 10.3K and closed here, and I never bought back. And I was like, nah, I'm not going to allow that. I'm going to wait a little bit because I'm not the earliest person to do anything, right? I waited a little bit. It went sideways. And I'm like, okay, this could be a bear flag. And I didn't buy anything during that time. I waited, and then I got up when it started to go here. So I still didn't buy directly there. That's a $10,000 difference. Who cares when I was short down here for $20,000 or $30,000, right? So you guys got to know these people are smart. They're the ones that are influencing the market. So when somebody is telling you, usually these rich people too, are telling you buy the dip, they need you to buy when they're selling. They need you to sell when they're buying. That's literally what happens. And then when they sell so much, they can force you. You see this thing, it's called a wick. You notice this is a big fat red candle, and then it's got this line right here. When you see these lines, those are called wicks. That means that got bought out. It went shoot and then got bought out very quickly back up. That was people getting liquidated left and right. Their asses were getting handed to them. And they got forced to do it. So we can't even call them, because people want to say they're dumb for selling. Actually, they just messed up because they borrowed against it. They listened to the regular person. Think about it. Most of the people that's telling you to buy these things, they're taxi drivers. They don't come from a financial background. They don't know any of this stuff. They don't even know that staking means. I asked the person that told me to stake, what does staking mean? They couldn't tell me. Then they thought that these other companies or these other crypto projects were not legitimate, but this other one was. And I said, did you know that this crypto only existed for 1 year? And then he was like, what? First, he was trying to argue with me. And then when I asked him the third time, he was like, what do you mean? It's been around longer than that. I said, no, 1 year and a day. Where is it at? The thing he was talking about was Pancake Swap. He was like, yeah, this thing has been around for a long time. And I'll show you guys right here. And then I'll read the comment. I noticed 2 people or somebody dropped a comment. Standard Procedure said, I tried day trading USDT BTC on Binance with a couple $100, but where I thought I would make tiny profits with each trade, I was actually losing tiny amounts with each trade. Couldn't work out what I was doing wrong, so I left it and decided swing trading is the way to go instead. Maybe was due to Binance fees or moving to USDT. Yeah, you didn't account for the fees. You have to make sure you account for the fees. I know exactly what I got to do. You know what the fees on Binance are? I can tell you right now. It's 0 point for the maker fee or the taker fee, which is what you would be doing. If you're doing it on a taker fee, means you're buying from the order book. You're doing market sell, or you're just buying and selling there. That's 0.04. Here we go. Here's what you need. Let's say that you did leverage. I'm going to do it in leverage. So I did 10x leverage, 0.04. That's that. Okay? That's 0.4. That's how much I got to make in profit on my trade in order for me to do that. Oh, yeah, that I got to do that. Now, here's the thing. You got to multiply that by 2 because it's selling and buying. So actually what I really got to make is 0.8%. And that's with leverage. So that means what you had to do is you had to make sure you made 0.08% in order to do that. And clearly you were not making that much. So that's what you needed to do, right? That's the fees as far as I can remember them from Binance. Now, they've probably fluctuated, and it depends on if you're verified, VIP and everything. But I think the highest fees are those. And then if you're a maker, that means you got larger amount of money, or you're doing an order book. So that means you're waiting for somebody to fill your order instead of doing that. Then you will have slightly lower fees, right? But here, swing trading is much better in my opinion. Dang, I forgot what I was about to say here. But yeah, so with this, people got forced because they thought they were doing big brain thinking. And so these people, they forced you out. They just kept selling and selling and selling and selling. And obviously there was a smaller amount of them. And they winded up getting 40% more Bitcoin of their total balance off of selling over 2 weeks. And in 2 days, they got 40% more in their wallets. Now, here's another thing that's going to blow your mind. 10x leverage is too risky for me. See, the leverage isn't the problem. The amount of money that you put in is the problem. You could do 2x leverage and you get your ass liquidated. You could do 1.5 and get liquidated. The problem is the amount of money. What the heck is this? An advertisement? Yeah. Okay, that's weird. This is weird. Okay, they're all wearing the same thing. It seems very sexualized, right? They said a couple gave birth to beautiful twin sisters. 9 years later, they are not so beautiful. Today, look at their latest photos. They explain it. Oh, okay, whatever. That was weird. I don't know why they even advertised that. I don't search anything like that on my stuff. But yeah, these advertisements are crazy. Let's see. Doge. Now this dude talk about Doge. Get the heck out of here with that. Lymphoma, I mean. So where's the one? They sold 200. I want you guys to see this. This guy is tracking all of our information. At Chainalysis, they reporting it directly to the 3-letter agency, CIA, IRS, FBI. They tracking everything we doing. So you think you about to get away with something, man, they get paying them hundreds of millions of dollars to do this. So this is the chief economist at Chainalysis, right? Now, he's going to show you, if I can scroll down, I thought I had it, but it refreshed. Here it is right here. On May 28th, he got the data. He says since the start of 2020, right? Because when people say the richest people in crypto are the people that have held, right? No, it's not. The richest people in crypto, or they said the richest people in crypto are the people that died. No, incorrect in my opinion. From what I can see is the richest people in crypto, like in Ethereum. Did you know that the biggest people that made the most money are not the people that bought Ethereum when it first came out? I think it was 2013 or was it 2011, right? It's not those people. It's all of the institutional traders that bought, or institutional investors that bought in 2017. I remember when I saw it off of his thing, I was like, wait a minute, what? And then I was like, oh yeah, that's common sense. They have more money. It doesn't matter. Like if you're the guy that got the $10 Bitcoin, you bought $10 in Bitcoin in 2008, right? Yeah, sure. You might have $100 million now, but guess what? You don't have. You ain't got the billions and trillions of dollars that could come in. So there's still going to be people that could buy more than you. All you got is the $10 in Bitcoin you bought when it first was in existence. And now you got 100 million. So now you feel like big dog. And then they're going to say, yeah, this person is here. Guess what? Somebody else that's going to have $1 billion is going to buy the more Bitcoin than you right now. And they're going to make more money than you. And then since they're selling and buying instead of buying and holding like you are, they're going to dump the market. Then they're going to swoop up with the rest of their billions of dollars and get more. Then the market's going to go up. They're going to dump the market and swoop some more up. So they're overall still going to make more than you. Sure, you're doing a good job. If you don't got the skills that they got, or the insider knowledge that they got, or the timing, sure, that works. But I'm just showing you guys here. Since 2020, the start of 2020. Do I need to zoom in on this? Here it is. Since the start of 2020, they bought nearly 600,000. It says 599,000 Bitcoin and sold 206,000. So let's round it down to 200,000 and 600,000. They made 400,000 extra Bitcoin from their buying and selling. He said, why is that on your feed? No clue. So this is what this is. So with you guys, here we go. Let's summarize this again. Just by simple mathematical measures of not focusing on trading these huge pump and dump things. Sure, you could chase the pumps. Sure, if that's what I understand the mindset of you wanting to chase the pumps, maybe you still put a percentage in another one, right? I think that's what I would do, right? I chase a pump with a percentage of my money, maybe 20%. And then the other 80%, I'm trying to figure out where are these other ones where I bought like real low here. Now this is, see, that's why I say in the moment it's a lot harder. Because right here, you're thinking $10,000 Bitcoin, not thinking you could get 6 times more. And then you say, all I got is $10. That ain't nothing. I need to chase this other one that looks like it's going to give me from my $10, 1,000 or 20,000. That's what people's mindsets are. Instead of, did you know that this is operating way faster than the stock market? So sure. Did you know that 1 year passes like that? 7 years of my life when I went by broke as a joke went just like that. And a lot of y'all are older on this channel, right? You know, 2 decades going by just like that. 1 decade going by just like that. 5 years going by just like that. And so many people, they're like, man, a year is a long time. No, it's not. Your birthday was just yesterday. That's what I always tell them. I'm like, your birthday was yesterday. And some of them get it and some of them don't. Next year is going to be the World Championships. We just had the Olympics and it's already tomorrow. It's already the World Championships and we just had the Olympics. That's how fast time goes. That's how fast it goes. Matter of fact, I still keep thinking this is Doha because I like that World Championship so much with some of the performances. And I keep thinking of Rio. And you know how many times on my videos I mistakenly said this is Rio instead of Tokyo? Like that's where my mind is. And that was what, 5 years ago? That's where my mind is stuck. So the years go by quickly, and so you could build up 3 to 5 years from what I've seen, at least the strategy that I've been applying and trying to show my mindset to my clients. 3 to 5 years, you could be set. Now you got to have a decent amount of money, and by decent, you probably got to have about 10,000 or something. If you could figure out how to get about 10,000 into this market or something like that, then I think that without leverage, many people can come away and they could have a lot of their goals if it's not something that's unrealistic. I don't want to say retire because that's very subjective to where you're living and everything like that. They say if you're trading with leverage on Binance fees, apply it to your capital only or the total leverage amount. So capital only. Binance fees, no, it's talk. The Binance fees are the leverage. So whatever the fees are, you multiply the fees by the leverage. That's what it is. You just got to think of percentage. I showed it on the screen. They said you're getting old like me. Nah, I'm younger than y'all. Okay, I'm younger than y'all. I'm getting younger as time goes on. Okay, time might be going forward for y'all, and my age, my numbers are getting up, but my body's getting younger and stronger as I get older. Okay, no steroids needed. Okay, it's called being a whole food plant-based vegan until I reach a threshold. Then my body's gonna say clunk, kick your ass. But yeah, you don't really need those large amounts. So going back here to Pancake Swap, this dude called Pancake Swap legitimate, and I showed him on this chart. Now apparently I guess Binance created it or something like that. So At least this thing has been in existence since September 28th or something, or 2020. That's a year and in a couple of days. A year and a couple of days. And this guy says, they are legitimate. The other ones that are built on here, they aren't. And I said, the only difference between this one and the other one is that this one has a whole bunch of money behind it, and the other ones don't. And some of them are, I'm not talking about the honeypot scams, like the ones that just scam you right off of that. And they call them rug pull. The only reason rug pull happened is because the Telegram groups banned people for using the word scam. So they had to reinvent it. So rug pull sounds nicer. He said he forgotten about Beijing 2015. Hey, it is what it is, man. I don't remember it happening either. But I wasn't really watching track like that. I think Rio I remember because I watched it a little bit. And then Doha, that's when I came back to watching it. The ones in between that, I really wasn't watching too much. So when Tory Bowie won in 2017, I didn't see that as it happened. So I didn't remember until I started doing the research on the video about her again. I was like, oh, shoot, she was ranked in the top 10 and top 5 a couple of these years. I was like, dang, she was that good. So I was like, no wonder y'all hyped about her. But so let's see. They said I always forget Beijing. Yeah. So just remember this. Perspective is a hell of a drug. Keeping perspective here. I just showed y'all the math. I took a trade, and let's just pretend I only used $10. I'm just trying to give you the lowest thing, right? If all I used was 10, because that's the minimum that you had to use on Binance. You couldn't go below that. $10 times that 100x leverage trade. Remember, 10 times 100 is 1,000. Remember, the other guy had 4,720 was his profit. And then at the end, I got this 1,800 because I went over to something else. This is repeating the same thing. Now that I started with 1,000, remember, and I just pretended like all the other money just went to crap. So if I took the 1,800 again and we multiplied that by 4, there I am. The 1,800 times 4 is 7,200. So I winded up with more money, about almost $3,000 more than the other person, pretending like my other money just didn't even matter. And this is going here. But then I just showed you 2 other assets that were there. If you had $1,000 and you just randomly threw $100 at or 100 different assets on Binance at the time, chances are you would be somewhere around the $50,000 or $60,000 mark right now. Then you got muscle room. Then you could say, well, let me see. Let me see something here. I'm going to come up here and then I'm going to do this. I'm not going to put, the $40,000 because all I got is 60. But you know what? I'll put 2,000 in this one. So 2,000 now turns into 2,800, or actually 30. By the same math, it would be about 3,600. You could decide to pull it out, or you could say, I'm going to leave it until it reaches my mark that I wanted to do. Or you could say, or you could do this. Now, this person started with 5,000. Now it's 10 something there. You got bully power now. Now, maybe 2,000 actually is still a little bit much than what I would do. I still would probably be doing 500, maybe 1,000. But I wouldn't be using those larger amounts of money. You guys get what I'm saying? So if you guys do want to learn that, like the people said earlier, just go into Patreon, second tier Patreon, subscribe to that. And then you can join the public groups that I'll be talking about this on the Patreon. So if you guys got any questions, ask me that right now while you got me here. And this is a video I'm coming out with while I'm still making the Tory Bowie video, because I changed the format of what I'm doing. So as I change the format, it's actually taking me longer to do the video. Because remember, I'm doing the gold label, platinum label, and all of those ranking systems. So as I do that, I'm actually going to have it on the screen floating while I'm talking about the people. And that's the whole education there. So just remember that. But remember, I just told y'all, if you just joining right now, thank you. Smash that like button. Likes are free. I appreciate everybody that has contributed to the Cash App, Patreon, and the Super Chats that we've had here. I really do appreciate that. Let's see. And remember, we were talking about how to make something from nothing in crypto. I just gave you a dead example here. Now, here's the next thing. This will be the last thing, and we out if there are no questions. Okay, what about right now? Because that's the most impressive, the most important thing right now. Sure, it looks like that right now because we're zoomed out. In the moment, this thing looks like this. Before this exploded, we would have been looking at this. You're like, okay, this looks real big. Now it looks tiny. And that's what people don't see. A lot of people try to confuse you. It's hard in the moment. That's one of the hardest things on how to exit. You looking at Bitcoin and it's $10,000. Or if we took that March example, it would have been $5,000, $6,000. You would have been looking at some of these things saying, yeah, this is like less than a penny, but I can't fathom this being 20 cents. I can't fathom this thing being $1 plus. Like, I just can't fathom this thing. See, that's where if it goes up 3 to 4 times or 2 to 4 times, you take your initial investment out and you go to sleep, right? I came in 28 minutes after the stream went live. I'll check it out from the start later. Yeah, you missed a lot of good information because I broke down why I outworked and outwhipped this other person, and I showed examples of people gambling their money and where it wasn't. And I actually referenced what you said about how it's high risk and everything. And I'm like, no, I don't do high risk. I'm very averse. I'm risk averse. Now at the point where I have more money, now that same amount, like if Bitcoin dropped down, it could drop down to 2,800 right now, and I'll still be fine. If I just put some money in there, that is a huge drop. That's too much, right? But for me, I'm okay. Now, looking at the examples I gave earlier, like with the one, I showed exactly what my trade was. That wasn't really necessarily a high risk. I took, if out of $1,000, if all I took was out of 1,000 was 10, I can't say that that's high risk. And I'll be hard pressed if you disagree with me. I can't see somebody really honestly disagreeing with that. If I took 1,000, because I'm taking 1%. I took 1%, right, out of that $1,000 and I threw it in this. That means I could have taken 1%, and that's out of 1,000 because I can afford to lose that. I can afford to live without it, essentially. And here are these other assets. I think it's about maybe 60, if even that, maybe 60 or 70. And if I put it all in these in that around the same time, that I'm just giving you one of the higher returning investments here, right? Because this was 100 times. And then I just showed you one of my trades where it went, I sold here. I probably was one of the people that caused it to dump with my large whale bag. And then I went to something else, sold it after another 80%, came here in July when it was around the Olympics or getting close to it or right around that time, because I wanted to focus on the YouTube channel more. Told my clients, hey, I'm not going to be here but I'm going to leave y'all this. Turns out the 3 that I mentioned were the highest performing assets other than that Shiba shitcoin thing out of the rest of the market. So I'm like, well, we did pretty good, right? Obviously not financial advice. You see in my mindset, I'm showing you my justification about why I'm doing something. And so this is all it is. You apply the strategy, rinse, wash, and repeat. Rinse, wash, and repeat. Don't panic. It takes your emotions out. Once this gets up to here, I'm out of my original trade. And in this case, it'll be like that $1,800 that I took out and I left the other $5,400 in there. That's what y'all got to do. So standard procedure, or anybody else that may be watching this, that's what you got to do. Well, that's not what you got to do if you don't want to. Not financial advice. I got to remember that, right? That's something that you can do. That's something that I got to do because that's what I'm doing. Y'all choose what y'all want to do. Y'all grown adults. We all grown adults here, or at least most of us. And so if you ain't got that much money in short time, and this took 1.5 years. This took 18 months. The example that I just told you, 1 year and 2 days that went there. I'm living my life. Obviously, I'm laughing it up. This was right before. This was before I made the YouTube channel. I made it here in end of May, early June. This thing is happening here, and I'm over here laughing it up on a YouTube channel. YouTube channel growing, my money's growing, right? I'm living my regular life. I ain't even got to think about it. All I know is once I just check it every once in a while, either hits it or it doesn't. And I've done my thing. I've done my due diligence. I've done that. And that's way you take your risk off. Because if you started with 1,000 and all you did every time it took out, eventually, if you keep repeating that, right? You keep repeating it. Because if you don't know where to take it out, and then, okay, here's the last thing. Let's say that I took my money out way back here, and I took out, it went up 3 to 4 times, right? And I took that out. Where do I ultimately take all of it out? Maybe I don't. Maybe I just take a little bit more now that it's 10 times higher. Yep, I took a little bit more. Then I took a little bit more that it got 30 or 50 times higher. Then when it went up to 100, my intuition was like, I'm out. That's why I just did that. It was 100. It was a solid number. It's 100 X. My intuition was like, let me pull this out, right? Because I'm experienced enough in this to know that this was a huge pump. Just knowing this right here, looking at this history here, knowing that the all-time high was down here, and then looking how big it is from this. Oh yeah, I'm taking it out. It's 100, and I even told the Telegram group, I think this is a good time to sell, guys, not financial advice. You know what they did? They banned me from the group because they said you're FUD. That's fear, uncertainty, and doubt. You're just spreading fear. You just talking against it. How dare somebody do that? I was like, look, I made 100x. I know red flags when I see them. This is what happened with Bitcoin. It's not going to forever go up. So why am I going to think that? Or I could have just held it, right? I could have just held it because I took my original investment out all the way back here. Those are two strategies. That way you can never lose. So if you don't know, it's just like you take a little bit of your money out every once in a while. You say 3 to 4 times the first time. Then you say about 20 times profit the next time. Then at 100 times profit the next time. You see the numbers are getting bigger and wider. So it's not like every time it goes up 3 to 4 times I take it out. It's 3 to 4 times return on investment the first time out. Then it's about either 10 or 20 times the next time out. Then it stretches out. You got to determine that, right? And on this one, I had discovered it so late and I had profited on other things. I say I'm gonna leave it alone. Then when it got up to about 107x, I think, that's when I'm like, red flag. And then it came into here and it popped out. That's all. So thank you guys for coming out. I think that's about it. Be sure to check out my other videos as they come out. I appreciate y'all.